And moving into our main topic for Security Token Show, episode 123, we're doing everything stablecoins, CBDCs, stores of value in the tokenized assets space. We're going to break it all down and figure out what's really going on. We had some really interesting updates coming from both the US and outside of the US that you really want to hear. We want to break it all down. But before we do into that, we do have to talk about our companies of the week. This is a segment where Herwig and I picked two companies in the space that were the biggest movers that really caught our attention. And this is really a fun segment to bring some light to some awesome advancements in the space.
That's right.
Herwig, take it away.
This is our first nominees of the year here,
right, 2022.
Which is pretty cool. Last week we announced our company of the year, which did go to INX. But this week, I am excited to announce that my company of the week is actually ECXX. Now, they are a Singaporean digital securities exchange, so you may not necessarily have heard of them, but they have been part of the MAS, that's the SEC equivalent. They have a sandbox there, and they've been part of that program for some time now, developing their platform, working closely with the regulator in order to trade digital securities. And of course, they're on the same page. They believe this is the future. We're talking about real estate, we're talking about private equity and venture capital, and we're talking about equities across the board. They plan to go after all of it. And since January 1st, 2022, the MAS has officially graduated ECXX.
Nice.
So they are now a RMO, that's a recognized market operator, essentially an ATS equivalent here in the United States. And they will now be going full gung-ho on trading and listing security tokens. And we're super excited to see that happen. That's why I'm making them my company of the week.
It's really interesting to compare the MAS, where they have a regulatory sandbox where companies can go in for, it seems like be a period of maybe 18 months or so, where they work directly with the regulators, build up that licensure, and then they graduate from that program, as opposed to in the US with the ATS license, where it's kind of an approval process that's just a back and forth with comments. Both sides making a ton of advancements, but Singapore is continuing to be a hotbed for security.
Gotta give it to them. But Kyle, I'm interested to hear your first choice of the year.
My first choice of the year is also looking internationally at the SIX Exchange. SIX Exchange is the national stock exchange of Switzerland, and in coordination with the Bank of International Settlements themselves, as well as the Swiss National Bank, on top of some other partners like Credit Suisse, Goldman Sachs, UBS, and others, they are launching a wholesale CBDC trial. It's not their first one either. They're really finalizing a lot of this stuff. And so let's talk about wholesale CBDCs. Certainly we've got more about this in our main topic segment, but they're launching a test drive for CBDC settlement. This is like 2, 3, or 4. They're, in terms of how many times they've done this. When we're talking wholesale, we're talking bank to bank. This is when one bank works with another, keeps everything inside the ecosystem. And the real benefit here is for enhancing settlement in securities trading and settlement. This is what they specifically know. So potentially it comes along with tokenizing securities through their platform as well. So supposedly the CBDC that they've launched is ready, and they're really just waiting for a regulatory green light to make this thing go live. So shout out to SIX for making some huge advancements in CBDCs as well as tokenized stock settlement.
That's awesome. Switzerland has always been, an innovator in the financial landscape, and I'm sure that the SIX Exchange is going to go ahead and get that approval to launch that program. So very exciting to see what that means for the future of capital markets with the SIX Exchange. But also, as you pointed out, a great segue into our main topic, the digital dollar. What does it mean? Does it mean that the government can go for your dollar like we suggested? Well, you make that decision for yourself. We're here to tell you today about what central bank digital currencies and stable coins are, digital dollars as you hear them, and where we are today in terms of their development and policy. So with that, Kyle, I think we can get started with maybe just a quick brief primer. Central bank digital currencies is kind of the new hot word of the year. And that's because there are now over 70 different countries around the world exploring this technology. Back in 2020, we released a list of central bank digital currencies, started out around 50. Now we're seeing really, really mass adoption as more and more experiments happen. And what we're talking about is actually the government issuing not just physical paper behind their fiat currency, but actually issuing a tokenized or digital version of that dollar, which means you can use it much like you would in all your Venmo or PayPal or Zelle type apps, but actually using that with merchants, with your friends, with everything that you're used to doing with cash today.
Yeah, I think that when we're talking about CBDCs, these are not stable coins. When you look at stable coins, these are private issuers or private banks or private companies that are issuing a dollar pegged currency, right? So that you can use it in trade and things like that, but it's not endorsed by a central bank. It's not certainly not endorsed by a government or any type of system like that. So very important to make those distinctions because as we're going to talk about later, regulators may have different opinions on a CBDC versus a stable coin. And then there's also this other term, wholesale CBDC, that well, honestly, the first time that I had seen that specific distinction was in my Company of the Week article through Six Exchange, where a wholesale CBDC would be a central bank digital currency endorsed by the central bank, but specifically only to be used for bank-to-bank transfers as opposed to a traditional CBDC, which might be for retail, just for average people, where you're replacing a dollar. In this case, you would not be replacing the dollar, it would be for bank transfers.
To make this simple for you, you don't need to care about wholesale CBDC. Sorry, Kyle, but you don't. That just means that we're going to have a more efficient system in the back end, and there are already tons of things going on in the back end that you don't know about. What you care about is when the government comes out with a retail CBDC.
Right.
This is a currency that is, as you said, backed by the government, issued by the government, and therefore it definitely has a lot more credibility than any private company, like we've seen with the success of USDC, as well as recently a group of banks coming together and saying they're going to launch their own stable coin as well. But there's a big, big difference between that CBDC. But before we get into that, I think maybe why is this the future, Kyle? Let's talk about the fact that these new stable coins or central bank digital currencies enable instant payments, right? In the current banking layer, we've got a very myriad of systems, very complex, where you have to go through all these hoops that payment processors and banks and all these middlemen take their cut from this complex system. They enable to make sure that credit card and regular transactions happen. But if everything were to be done on the blockchain, as we've been preaching for instant settlement of securities, the same way you get instant settlement of payments, which means merchants, as well as everyone else who touches that dollar, can get paid instantly, which I think is a pretty big deal, Kyle.
Yeah, I think that there's so many benefits in having this process all be digital, right? Nobody uses cash for anything. It's super inefficient. And so improving that process makes a ton of sense, especially when you're talking about cryptocurrencies, right? If you're trading with leveraging Bitcoin or using some of these other assets, you might want to keep your dollars inside of that kind of digital or metaverse ecosystem, right? You don't necessarily want to pull your dollars out to a bank and then have to wait 3 to 5 days and then put it back in. You may want to have it inside of that digital world, but you don't want the exposure to the volatility of Bitcoin or Ethereum, so you keep it in a US dollar stablecoin.
And that's absolutely what we've seen, especially with, of course, the pandemic of COVID. But as just a traditional adoption of technology, we've seen societies go cashless. This is very big in Sweden. This is very big in many, more third world countries and emerging countries that get a chance to redevelop their infrastructure. It's actually really popular. You got it in the Bahamas. You got it across Asia, and actually even you've got the largest version of it out in China. Specifically, I'm talking about central bank digital currency. So what I'm telling you is there's an yuan right now in China that is issued, and the entire nation, it's been rolled out over the last few years across the entire nation basically, can now start to take advantage of this. They have actually ATMs that allow you to go digital to cash and vice versa. They have an app on the App Store right now that's supposedly top trending for downloads. I mean, we're seeing real adoption from this. I've even heard of stories where homeless people would prefer to accept a digital yuan than they would cash.
Yeah, it's fascinating. You see it in other countries as well. The Bahamas launched the Sand Dollar, their central bank digital currency, looking to help pioneer a lot of this stuff. But Herwig, we talked about this before the show, and I did want to kind of highlight the fact that El Salvador is not doing a CBDC.
That's right.
This is potentially, one of those opportunities to offer clarification. Can you talk more about what El Salvador's been up to and how they're kind of
with
changing
pleasure,
their
Kyle.
policy?
And in fact, that's a good segue into our next topic. So I think it's great to point out, in fact, that El Salvador is indeed not issuing their own central bank digital currency. Instead of doing this, they chose to adopt Bitcoin as their currency standard, and therefore it is treated the same way as a dollar or their own Salvadorian dollar if they were to create one through the central bank digital currency. But the very reason they adopted Bitcoin was to get themselves off of the US dollar, which they're reliant on. And so that's what makes this a big deal, because central bank digital currencies per their name central, are being issued by the government and therefore comes with a lot of the restrictions and concerns that we can talk about next, Kyle, that Bitcoin, of course, doesn't necessarily have, it being a decentralized currency. Now, of course, that comes with its own set of problems, but I think the bigger thing people are concerned about is regarding privacy. And as we pointed out regarding your title of this episode, the fact is it is possible for a government to come after your money, because if your money is completely digital and it is managed by the central bank in a digital fashion, it does mean that the central bank could say, freeze your dollars, right, or return your dollars or take them back. But also it could just be enabling new financial services and new capabilities. And that also leads, of course, into privacy issues, information, right? Now the government may know exactly where you're spending your money and how you're spending it, et cetera. How could the government potentially nefariously use this? All these questions arise for a central bank digital currency. And that's why there's actually even a congressman that's put in a bill to try and say, hey, we want to ban central bank digital currencies from being issued in the United States. What do you think about all that, Kyle?
It's fascinating. I totally understand where they're coming from, in the sense that, having a central bank digital currency does allow potentially the privacy of the individuals and the self-sovereignty of the money that we own to be something that is compromised, right? In theory, you could be able to see exactly how many dollars any individual has, where those assets are going, and as you mentioned, maybe freeze or control where these assets are moving. We've seen how other countries have frozen cash from leaving their ecosystems, and the control and the pressure that can put on its citizens, something that we really haven't had to deal with in the United States through our economy, something that the CBDC could potentially drive. That being said, I don't see that there's a ton of demand for CBDCs, certainly here in the US. I've seen articles that suggest it's potentially a solution in search of a problem, but we've seen other regulators that are supportive of stablecoins. I do see the value in having digital money. It's just about who controls it. So we look at, for a retail investor, you've got USDC, you've got the Gemini dollar, you've got examples like Tether as well that do have bank accounts. Now maybe Tether, it's somewhat under question if they have a full 100% backing or not, but there are some of these examples. Even Visa and Consensus are working on technology to build CBDC technology, whether it's endorsed or not by central banks. But I think it's a good transition into the Fed and other US regulators and where their perspective has lied on this space. And it's really been an interesting dichotomy between the chairman of the Fed, the Federal Reserve, which controls the money in the United States, versus the chairman of the SEC, which controls the securities and the investments. And so they actually do seem to have very different perspectives on this. You see Gary Gensler, we've reported here on the show before, he's the chairman of the SEC. He's come out and said that if you issue a stable coin that's backed 1-to-1 to a dollar, but it's backed by a portfolio of investments where it's not exactly a bank account of dollars, but it potentially has treasury bonds, things like that, that he suggests that could be a security and is not allowed to be used by regular retail people without following securities laws. Whereas Jay Powell recently has come out and said, well, private stablecoins, we have no problem with. They're good to go. So interesting to see. Also, the CFTC has also kind of put their thoughts in here. There's not really a consensus in the US, which also goes to show why a CBDC is probably unlikely.
Yeah, I think the United States doesn't tend to be the first to jump on new age technologies. Hence why I don't think we've seen security tokens just completely displace Wall Street yet. But I do think that we have seen some of the largest stablecoin issuers come out of the United States because of how powerful the dollar is. So I think, to your point, regulators have no choice but to understand this technology and figure out how to work with it. And to your earlier choice with your company of the week with Six, the fact that they're working on a wholesale CBDC may be where regulators see a lot of potential, right? In terms of fraud and security, the ability to go ahead and seize back where there's, an issue. And we've actually seen this in DeFi and crypto too, where protocols get hacked. And luckily, thanks to these stablecoin providers, they're able to claw back funds back to the original issuer and not harm the community and its stature. So there's potentially good sides to this. But of course, it's going to be interesting to see where the whole, actually economy ends up regarding leveraging stablecoins, like you said, within its actual economy versus just potentially in a securities environment.
Yeah, no, and it's interesting to see. There's private issuers like Circle, which is not a bank, that's issued USDC, one of the most widely used stable coins. You've got this kind of CBDC example. And then there's maybe somewhere in the middle, like what we saw with USDF. This is a bunch of banks in the US that are working towards issuing their own stablecoin as well. USDF is the ticker. The three banks that are leading this charge are the New York Community Bank, First Bank, as well as Sterling National Bank. And they are actually creating their own stablecoin as well, which does start to fall into somewhere in this middle ground, because it's not a central bank digital currency, but it's a BDC in terms of a banking digital currency. And we'll have to see how that kind of plays into the whole ecosystem as well.
I certainly think that regulation will fall probably into place of some kind regarding all of this. But it's still early days for stablecoins and CBDC, so hopefully you learned something about this. You have a better understanding of what these digital dollars mean to you. Certainly make your own opinion regarding privacy and security and benefits, but we do think this technology is here to stay, and there are underlying efficiencies that will drive market disruption. So we'll, of course, keep you aware of all developments going on in this space, but in the meantime, please be sure to check out stomarket.com, sign up for the What's Drippin' newsletter, join our socials, and get all the latest news and trading information right there on our website.
Check out the link in bio for all the amazing things going on, and we'll talk to you next week.
Happy tokenizing.